what I'd like to do today is, I think there's a problem with the title itself because we're talking about a bubble. And very often when we talk about crypto, we tend to think about crypto as a bubbly/criminal game. In this talk, I'd like to understand how cryptocurrency, crypto technology is providing people with opportunities for financial and economic emancipation, but also just to essentially gauge the real life impact beyond the headline, beyond the bubble talk that crypto technology is providing to people everywhere in the globe, really. So that's essentially my objective for this talk. I'm very happy to be joined by this trio of wonderful panelists. Maybe let's just start sort of cold. Tani, do you want to tell us a bit what you do and what your experience regarding crypto has been?
Sure. So I lead a community, as it was said earlier, called RAVN, and we are an investment education platform primarily of Black and Afro-Latina women. This is important because Black and Afro-Latino women in the U.S. are at the bottom of the wealth gap. So we are very focused on long-term investing. So cryptocurrency and other digital assets come up as a factor because we do think, although we're still watching and being conservative in some ways, we believe that it's going to have a significant impact on our future. We also believe that it is an opportunity for us and other marginalized communities to participate where we've been left out behind in the past.
Wonderful. Why do you think this new technology, crypto, these new instruments are the possible way to go? What is wrong with the conventional financial system that crypto is providing instead?
Well, I think right now there's a lot of barriers to entry in the financial system, especially when it comes to creating wealth. Prime example in the U.S., the accreditor or sophisticated investor definition here is not based on your experience or knowledge, in equities or in investing. It's based only on your net worth. And we all know that someone can have a higher net worth through inheritance and other means. That does not mean that they are sophisticated or experienced with investing. So when policies and regulations are putting in place like this, it is a huge barrier for everyday people who want to participate in the market, who want to participate in emerging trends like cryptocurrency.
Okay, very clear. Chimezie, what is the situation in Nigeria? Are similar dynamics at play there, or is it something a bit different? What from your listening post, what are you seeing in terms of crypto?
Yes, in Nigeria, as most African countries, crypto has become many things for many people, especially the young population, because there are several economic drivers that are encouraging a lot of people to get involved with crypto. For instance, when it comes to remittances, crypto has become the primary tool that people use nowadays to send money back to friends and family at home from diaspora. Okay, we also have seen where crypto has become the key instrument that people are using to hedge themselves against the constantly depreciating local currencies that are issued and managed by governments. Okay, and people are much more comfortable moving their assets to cryptos, Bitcoin, Ethereum, and assets that have the potential to preserve their wealth. Okay, so you also have crypto has also become a tool of innovation because most startups in Nigeria and most African countries, they are building a lot of new tools, new services, new products that are driven by blockchain technology and utilizing crypto as an underlying platform to build out some of these new solutions. So there has been a lot of VC funding coming into Africa based on crypto currency and blockchain technology itself. So it's one of the most revolutionary technologies that has received mass adoption, and it's going to get more, even though we have regulatory and policy issues that are yet to be straightened out. But all the same, I believe strongly that Africa generally will do very well if they take advantage of this technology.
Can you give me like 10 quick seconds regarding the regulatory crackdown that is going on in Nigeria on crypto? What is the main issue
Okay,
there?
in Nigeria, we have three institutions that are directly important when it comes to crypto regulation. We have the Security and Exchange Commission of Nigeria, we have the Central Bank of Nigeria, we have the National Agency for Technology Development. So these three agencies are at various stages of drafting regulatory frameworks. I know that Security and Exchange Commission of Nigeria also had put out an intent to regulate, but most of the efforts that are being made by these agencies have been thwarted by the central bank's adamant attitude through cryptocurrencies generally, because earlier in the year, around February or March this year, the Central Bank of Nigeria put through a spanner, so to speak, in the works for most crypto companies when they sent out a memo that restricted financial services companies and banks from rendering financial services to crypto-based companies. And by that reason, Security and Exchange Commission had to suspend their intent to regulate, because there's no way you can regulate an entity that doesn't operate a bank account.
Right. Okay, I'd like to move to Lex here. Lex, a lot of people are talking about decentralized finance as a place where new ways of doing finance or creating wealth, of building new opportunities are happening, right? Essentially, it's this new sandbox where a lot of people are experimenting with new wealth creation systems. Can you give me a sense of that? Because again, DeFi, decentralized finance, is often bad-mouthed as just a bubbly, gamey place. What do you see from your perspective, from your observation point? What's going on there? And is this something that is going to stay with us, or is just a fad?
Sure. Well, everything's a fad and you die. You know, that's sort of the I would frame a response to that answer, to that question. You know, there's nothing really new going on in terms of the types of behavior that people do. So over thousands of years, people have learned to pay, to have money in motion. Then they've learned to save, which is putting the money somewhere. Then they've learned to invest, potentially borrow, and then save for their retirement and insure things over time. And so these are timeless behaviors that people do, and decentralized finance does nothing but that. So, you know, you can paint with the same brush the types of functionalities that you get out of DeFi that you would get out of Goldman Sachs or Bank of America or Citigroup or HSBC. You know, we know what the things are that people need. The main innovation is the venue in which these things happen. And so just like computing went from mathematics on a piece of paper to feeding a ticket into a giant warehouse to desktops to then mobile and the cloud, computation is moving out of that into blockchains. And this isn't particularly controversial. It's just a better place to create computation that renders digital objects, that has scarcity, that has economic markets. And so you start putting the software that you would normally put on a desktop computer or on a server farm, you put that computation into a blockchain network that is secured by thousands of validators and miners that you can trust, which means you can do things in a much cheaper and kind of more structurally efficient way, not necessarily marginally, but structurally more efficient. And so you get a really interesting ecosystem. And just to put things in perspective, ConsenSys runs MetaMask, which is the leading Web3 wallet, the leading DeFi wallet, and we have 10 million monthly average users across every single country in the world. So I think the framing of this as either criminal or fraudulent on the one hand is deeply misleading. That has been shown to be not true by fairly conclusive research in the sense that
0.34% transactions on the blockchain are fraudulent. 0.34, so very low. Good. Just one question, very quick. I really want a very quick repartee from you. Who are these people? What's the profile of the people who are using MetaMask, that are using DeFi, that are essentially discovering this new means of carrying out financial trading or any kind of economic activity?
in every country, they're going to be different. I mean, this is literally in every country in the world, right? So the person who's doing it in Silicon Valley to out of peer pressure or entrepreneurship or whatever is going to be quite different from the person in Venezuela or Brazil, who's going to be quite different from a person in the Philippines who might be using blockchain-based gaming as their primary source of income. So it's the same question as who uses the internet, what's their profile, can we stereotype them? We can't, because it's literally everybody.
Right. One thing that seems to me has been the keynote of regulators, for sure regulators in the US, is this concept of, which is totally fair, of investor protection. So essentially crypto, people who invest in crypto, use crypto, need to be protected. My question is whether, maybe let's ask Tani first, whether there is a risk that there is over-regulation, or that this preoccupation with investor protection first and foremost might stifle the kind of opportunities you've been describing. From your perspective, what's going on there?
Yeah, so I live in New York, arguably the financial capital of the world, and I find that sometimes our regulators are a little overzealous, very quick to, come down on anything new and trending, and overregulation is a particular issue. I think it actually interferes with free market, our free market system. I think it unfairly excludes a lot of people. And one of the reasons that happens is because when regulators are, frankly, in my opinion, out of touch with all of the key stakeholders. They're in touch with a small subset, and that is how the policies are determined. And I think that won't change until everyone has a proverbial seat at the table and everyone is a part of the discussion. Because if you are creating policies and regulations, you have to consider how it affects everyone and not a small few. And this is what's happening, right? We see something, it's being regulated or overregulated, as we're discussing, in the name of protecting us. But what it's actually doing for a lot of communities is leaving them out, right? Leaving them out, stopping them from participating in things that can actually help them live a better life, whether it be in banking, whether it be in creating wealth, so many different avenues, whether it be building an economy. When we talk about utilizing crypto and blockchain, we're not only talking about developing countries, but in the US, we have, cities, we have, neighborhoods that are underbanked, right? And frankly, unbanked that really can benefit from what crypto and the blockchain technology can offer.
One quick question though. I mean, there have been scams, there have been heists, there have been irrational behaviors. I can think for possibly the ICO event. Craze. I don't want to use bubble or craze because I know that it's a bit of a charge word. But so what is good regulation in order to actually achieve that minimum of protection? Because some protection needs to be baked into the system, right?
Yeah, so good is relative. But what I will say is, again, when all the key stakeholders, not just a selective, you have a seat at the decision-making table, assuring that their lived experiences are included, that's the start. That's where we can start to making good regulation. And I'll just touch quickly on the ICO crash, the ICO craze as an example.
The ICO moment.
At the moment, yes. I sit on the side where I think that regulation came down a bit too harsh. I think that there are some that I think, especially specifically for marginalized communities, right? I'm a Black woman in the US, I'm a founder, right? We essentially raise, let's just call it what it is, 0% venture capital. We can do the 0.006%, but it's 0%. I think the needle is now moving in 2021, probably because of BLM, to 1%. But when we think about 1% going to Black women, and then overall 1% of venture capital going to less than 20% of people of color, marginalized groups, it's outrageous, right? And when you have an opportunity like an ICO where you have entrepreneurs who are saying like, I'm going to take this in my own hands, I can have the people support me, I can raise money this way without, with removing the intermediaries, right? Continue to remove the middlemen. I can go right to my people. That presents an opportunity. And in the ICO crash of 2017, I believe that opportunity was snatched away from many people who are just not bad actors. There were many bad actors, but not everyone. And when we just, cut it off and we don't consider everyone involved, this is where, in my opinion, regulation goes bad.
Let's ask Chimezie a bit. From your point of view, what does good regulation look like?
Okay, just like as she has said, there are bad actors and there are good actors, and you don't throw a baby away because the water is dirty. Okay, so there has to be some risk-based approach to regulating the space, and the crypto space and the blockchain technology itself, it's not too different from other systems that people have used in perpetrating nefarious crimes and activities. So, but you didn't ban the US dollar. You didn't ban people from using US dollar to transact, even though we know that drug barons and hired assassins, they usually prefer to be paid in dollars. Okay, so it's not the proper approach when you say, okay, let's stifle the technology because of what people are doing wrong with that technology. So what we advocate from our side as industry operators in Nigeria is a risk-based approach. And we also have challenged the regulators to bring in crypto-based companies into reporting entities, just like financial service providers are made to be reporting entities, reporting to several government agencies to create that transparency that they actually desire. Because without having them be reporting entities, then it will be difficult for you to actually tell what goes on in those platforms. So it starts first of all by bringing them in, under a regulatory umbrella. And once they are in, then you make them reporting entities and subject them to the same regulatory standards that you use for every other financial services provider. That way, everybody will be comfortable. And if anything goes wrong, you will be very, very sure where you can start looking for the solution from.
Thank you. Lex, are we looking at this from the wrong perspective? Are we using sort of outdated templates to understand what should be regulated and how? Should we kind of change our framework of reference and interpretation when we talk about adding rules to how DeFi or crypto works? Do you think regulators have been stuck in the past in the way they look at things?
Yeah, I don't. The past is an interesting place. We all are stuck in there in some way. I think there's a framing problem. First of all, this is a framing problem across the world. So every single country has different approaches to the regulation of its financial industry. And so, for example, if I'm in the US, why should I respect China's approach to regulating financial services? And if I'm in China, why should I respect the American approach? And if I'm in France, why should I care about the American approach, and so on? Crypto's in every country, and so it's an impractical thing to say it's going to comport with every single regulation in every single country. It's a maze that's not possible. And I think the right answer comes from principles rather than rules, because rules are always reactive to the past and they solve a problem that's happened. They don't necessarily solve the problem that you're worried about in the future. And so a lot of the rules that are reacting to the crypto ecosystem today are really sort of confused in framing it as preventing some sort of financial crisis or financial meltdown. And what people don't understand is this isn't like, oh, finance but faster. This is like the internet but better.
Right.
So I'll say that again. It's not like finance is faster now and we save 20% in our database and we don't have financial advisors. That's already happened. That's gone. That's over. This is a new internet that is built on value, that incorporates economics, and that reformats a whole lot more than just how your money moves around.
Wow, you finished just 9 minutes shy of the ending. Thank you, all of you. It was a delight to host this panel, and hope to see you soon again, possibly in person, possibly in person.